All right, thank you so much for staying with us on the program this morning on ITV. We'll start up the conversation right away. And I have my guest who is joining me virtually on the program this morning from Lagos. Austin Adegwe is an economist and a banker. No understand the Nigeria economics properly than I do. For us to make sense out of the inflation reduction in figures, the figures versus the market reality. Austin, good morning and good to have you on the program this morning.
Good morning, Lawrence. Good morning, viewers. Thank you.
All right, let's start making sense. Since last year in November, we've seen the statistics and the figure that has been coming out from the National Bureau of Statistics, the NBS, about inflation figure, how it rose above more than 25-year level to 33% around November, December. Then lately, they started telling us it's reducing, it's coming down. The figure for June was released in July. It was standing at 22.22%. The figure of July has been released in August, just a few days ago. They are telling us that the figure has reduced down from 22.22% to now 21.88%. But the question has always been the reality in terms of the market factor and figure, and the figures we're getting from the National Bureau of Statistics. Does it correlate from your end as an expert in economics, and not just an expert in economics, somebody who is also in the banking sector? Let's start with that.
Thank you very much, Lawrence. As you already know, the nation's inflation was rebased in January, which of course is a global practice, the standard global practice to rebase inflation every 5 years. So National Bureau of Statistics is actually in order to have rebased the inflation. But the drop in the figure that you are alluding to was just as a result of changing the methodology, the weighting structure, and the price reference year. Not much of general price level coming down, but just change in the methodology of computing inflation. It will be sad, it will be rather sad if the authorities begin to push, that inflation has actually come down. Inflation hasn't come down because the same MBS that releases selected food price watch. If you look at January to April that they've released thus far, all right, the average increase in percentage of all the food that they are actually monitoring, about 42 of them, is around 7% increase. But if you look at food inflation, is dropping. Now, Lawrence, something happened when the rebasing was done. Like I said, there is no problem with rebasing either your inflation or your GDP. But you must be very careful so that it is not wrongly interpreted. Now, the way we calculate inflation before 2025, okay, one, we're using the low index method, and the reference price was 2010, while the reference weight was 2009. So you can imagine the prices that existed in 2010. You may never get them back again. Okay, even starting from 2016, when MBS also began to publish selected price index, you could see that a lot has changed. So as it stands now, it is actually wrong to even compare inflation rates from December 2024 down to 2010, then compare them with the new inflation figures that we're having, because they are not of the same base. Now, MBS did something that worried me at the time, and we talked about it, but many Nigerians didn't pay attention. Okay, in changing the weighting structure, by the way, the weighting structure is just like identifying those areas, or we call them divisions, okay, that compete for household income, and it gives them relevance in how the inflation figures are actually churned out. So, for example, food and food-related items in our inflation as at 2009, the weight that was given to food and food-related items was 51.8%. How did they come about this? The survey showed that household income, average household income or average household spent about 51.8% of their income on food and food-related items. But coming to 2024, that weight was changed. MBS then pushed the narrative that household in 2023, when the survey was done, spent only 40% of their income on food and food-related items. Now, that is a little bit disturbing because you agree with me that the inflation we faced in 2024 saw households spending well over 80 to 90% of their income on food and food related items, not because they were having more food, but just because the prices spiked in 2024. To so say that only 40% of household income was spent on food, and as a result, you've then reduced the importance of food and food related items in the competition of inflation by over 11%. All right. So the food you eat away from home has now been taken away from this division and then placed in what we eat in the restaurants. Students' accommodation, okay, has also been moved from housing down to accommodation services. So all these changes all these changes, they are telling us that housing, water, electricity, gas, and others, which constituted about 16.7% of household income in 2009, now, appeals to just 8.4%. This can't be true because rents are going up. Electricity tariff is going up. Gas, of course, we know petrol, fuel. All these things have gone up and actually took chunk of consumers' income, household income. So how come when we're supposed to be reporting more, okay, on housing, water, electricity, and gas, we're now saying that it has actually dropped to 8.4% from 16.7%. Now, why am I laying this groundwork? It's important that we understand that the weight you give to each division, to a large extent, will determine how your inflation figures will stand going forward. Because if food and food related items are going up now, the effect or impact on the headline inflation will no longer be as much as it used to be, okay, based on the old system, because you've just watered down the significance of food and food related items from 51.8 points to 40 points. Now, look at another area that matters to us, clothing and footwear. Okay, they dropped it by 2.7% from 7.7 to 5%. Well, we might argue that in 2024, people weren't too concerned about what they wear. The important thing to them was what they just have to feed. You look at also transportation, all right, from 6.5% to 10.7%. This was okay because the transport cost actually spiked. And you could see that under that situation, all right, people spent more on transport. So this particular grading was all right. Look at information and communication technology that also moved from about 0.7 to about 3.3. So if we understand the weighting system that they've adopted, you would then appreciate why inflation will keep coming down, because where household is spending so much money, we have watered down the importance or the relevance, and we are putting the relevance on areas that don't actually have price spike from time to time. Now, Lawrence, the MB has also shot themselves in the leg. There's a report that they always release every month. It's called Selected Price Watch. Now, if you download this report for January and also for April, because the last report they've released is down to April. If you download it, you will see that on month-on-month basis, MBS is tracking national average of some commodities, right? Now, of the 43 commodities, all increased by nothing less than 4%. The only commodities that dropped in price are beans, brown beans, and white beans. By January, brown beans was 2,458 naira, and by April 2025, it's dropped to about 2,429. That's just off by about 29 naira. The same thing if you look at white beans, dropped by 26 naira. But look at other commodities that the same MBS, okay, is monitoring, like egg. In January, the same MBS reported that one egg, national average, cost 248 naira. By April, they are reporting the same commodity at 259 naira. All right. If you look at beef, they reported a kg of beef at 6,112 naira in January. But in April, they are reporting it at 6,000, about 6,544, which is about 6.8% increase. You can go on, okay, to see that even the commodities they are watching, these are food items. So that should also distill into food inflation. The food related prices that same MBS publishes month on month is not showing a decline in price. It is rather showing that prices are increasing. You can go on and on. Like I said, there are only two commodities. If you compare January and February, that actually dipped in price by less than 2%. Every other commodity in that 42 items, all right, indeed increased, some by 6%, some by 9%. So there's no correlation, just like rightly said. Because look at headline inflation in January, 24.5. By April, it was just 23.71, meaning that headline inflation dropped within this period. Food inflation as well was 26.1% in January, 21.6% in April. Again, there's no correlation. Food inflation is dropping. The same food prices that MBS is releasing is going up. So I agree totally with you that there is no correlation between the numbers and reality currently. But we should not also forget that the drop in the numbers wasn't as a result of reduction in general price level. It was just all about rebasing of this inflation, changing the price reference year and the weight reference year, which I also considered as one of the global best practices. But the numbers that have come down is not because prices in the market are coming down.
Okay, thank you very much for giving us a background to that, because we have to start with that conversation because we really need to know where we are and know where we are going. But if you look at the prices of staples like rice, beans, like you said, yam, and other essential commodities that the families normally buy, which seem to be very cheap before now. But it seems like those things are now luxury food. Before now, they would tell you that gari is a food for the common man. But today, I don't think the common man can even afford that thing we call gari anymore. But let me bring the question from this angle, Adigwe. Do you see some political undertone from these statistics and figures that is being released on a monthly basis? Because it seems like maybe once they release this is too high, somebody may just go and tell them, hey, young man, or the person in charge, bring it down. Let's make it look like this is what it is. But in reality, like you said, it does not really correlate. If you're telling me inflation in figure is coming down, prices of commodities in the market should also follow suit. If, for instance, I buy a cup of beans for, say, 500 naira when the inflation figure was 22.22%, now that you are saying it has come down to 21.88%, let me go to the market tomorrow and buy a cup of beans for, say, 300 naira from the previous 500 naira it used to be. But unfortunately, when we go to the market again tomorrow, you will see that either the prices remains the same or there's every possibility for it to even go up higher. Now, do you foresee some political undertone? Let's say they are playing politics with these figures from your own point of view.
Okay, as I alluded earlier, to rebase inflation shouldn't be political because it's expected that every 5 years you rebase your inflation so that you bring the numbers closer to reality. Lawrence, in 2016, January 2016, as reported by National Bureau of Statistics, January 2016, a kilogram, a kg of yam tuber, was selling in this country for 147 naira. That's national average. Was higher in some areas, lower in other areas. That was 2016. Now, because we don't have this report stretching back to 2010, giving you an understanding that by 2010, it would have even been lower than this 147 because of also inflation. So if in 2016, a kilogram of yam was selling at 147 naira, do we really uh, feel that, in all honesty, by May 2023, when this president was coming in, the same commodity has moved to 457 naira? So our reality is that we can never get back that era of 1 kilogram of yam selling at 147. In fact, by April 2025, it has moved to 2,240 naira from 147 in 2016. So when you rebase your inflation, all you're trying to do is simple. The economy must evolve. You can't necessarily stand in one place. Keep in mind that the base year before 2010 was 1990. But again, in 2014, we rebased it in believing that the prices that existed in
Okay,
1990 are no
Austin,
longer. Yeah.
let me cut you short a bit. We'll have to go on a short break. When we return from the break, you continue with your point. Let's go on a break on the show. Stay with us. All right, thank you so much for staying with us on the program TMI, reaching you live on the network service of independent television. We've been making sense out of the reduction in inflation figure from our Benin Network Center, the market reality versus the figure in itself. And my guest who has been joining me to make sense out of this is still with me live on the program, Austin Adigwe. So Austin, you were making a point about me asking you, or when I asked earlier, if the figures we're getting is political in nature. You were making a point before we went on the break.
Okay, yes. So my response was, in my last submission was, the numbers can be political. It's only those that do not have deep understanding of how these things work. And when you rebase your inflation figure, a lot will change.
Okay.
Not necessarily that prices of those items have actually come down, but because you've changed the methodology, you've shifted the price reference year from 2010 to 2024. You've also shifted the weight reference year. So all these things put together will definitely give a different result. In mathematics, we say numbers of the same base you can add together, right? But in this case now, inflation figures we had up to 2024 December, okay, cannot be compared with what we are having now because they were computed using different method and different weights. So, like I was telling you, to rebase your inflation is all right. There's nothing wrong with that. Okay. However, it must not be misconstrued that because you rebase your inflation and the numbers have come down, that the general price level has actually come down. So that's the point I'm trying to stress. Now, if anybody is celebrating this drop in inflation as part of the achievement of this administration, it's just sheer mischief because we know that the prices, I don't even want to start being subjective, looking at what is sold in the market. If we look at government-owned data, that's why I'm just stopping the selected price watch uh, at April, since they've not released for May, June, and July. So if you look at the inflation from January to April, and you look at also the selected price watch of central bank within the same period, you will see that there is no correlation between the numbers we're currently having and what the market is saying. I was giving you an example that in May 2023, a kg of yam as presented by National Bureau of Statistics was just 257 naira. As we speak, as at April 2025, it's gone up to 2,240. So who will see this and say prices are coming down? There is no way you're going to do that. Look at a dozen of egg. A dozen of egg in May 2023 was 933 national average. By April, it's gone to 6,150. So the decline you're seeing, look at even bread, which is the staple food that we eat. Back in 2016, it was 225. By 2023, it's moved to 596.11 national average. By April, it's gone up to 1,688. So there's no way you will see all this. And if you also go to the energy side, your cooking gas, your PMS, your diesel, okay, even electricity, all these things have gone up. So there is no way, whether you're looking at core inflation or you're looking at food inflation, or looking at headline inflation, for anybody to be thinking that inflation has come down. In any case, Lawrence, a classical example is what CBN is currently doing. Our benchmark lending rate or interest rate is still at 27.5%. Recall that when inflation was at 34%, they moved benchmark lending rates by over 800 basis points to 27.5. So if CBN truly believes that inflation is at 21%, they will not keep that 27.5% as the benchmark interest rate. You would have expected that at least they would have eased up on this contractionary monetary policy. They would have eased up because inflation is coming down. But the only reason why they are still maintaining that benchmark interest rate is because they are being cautious. They understand clearly that these numbers does not translate to inflation coming down in actual sense, but it is a number derived from the rebasing of your inflation. You said something the other time, and it's the other way around. Because you said when inflation is coming down, you expect that prices of items should be coming down. It's the other way around. It is when the prices of other items are coming down, that is the only time your inflation figure should come down. Because calculation is historical. You will notice that every 15th of the subsequent month, MBS will release the inflation figure for the previous month. That tells you that inflation is not calculated based on futuristic data. Inflation is calculated based on historical data, meaning that by July, you have watched the prices, you've seen all the movements in those prices, then you compute it based on what has happened. So before the numbers can come out, prices would have dropped. So it's the other way around. When general price level is dropping, it only shows mathematically that the value you will get when you plug these things into the formula will reduce. Not that when inflation is coming down, that is when prices will be coming down. No, it is when prices are coming down, the inflation figures will be coming down.
Okay, because that was one of the points I wanted you to make more for us to get an understanding. Because it seems like we are seeing it from the other way around. It's supposed to be when the prices are coming down that we should believe that inflation is coming down. But you now look as if we get figures every month from the National Bureau of Statistics, and we try to now make it look like this is the reality of the figure, which ought not to be in the right sense, because the average Nigerian who goes to the market should be the one who will now say, oh, indeed, the prices are coming down. But let's now move to the next one. Do you foresee a state where this inflation will continue to reduce in number? Because looking at the figures now versus the market reality, it continues to reduce in figures from the National Bureau of Statistics, but will not continue to see it in the reality of what we buy on a daily basis in the market, staples like rice, even up to garri, pepper, tomato, name it. Are we going to continue to see this round of every month figures reduction, but no reduction in prices?
Yes, most likely this trend may continue. One, because they've given us the premise for computation of this inflation, and Nigerians didn't challenge it. We didn't come back to them to say, no, in 2024, there is no way on earth you'll be telling us that we spent less on food and food-related items. There is no way you'll be telling us that accommodation-related expenses came even lower in 2024 compared to the reports back in 2009. So having established the basis for competing inflation going forward, and that basis has been accepted by Nigerians. And so we can't complain now. It simply means that once they plug in these numbers, we get the same result. Well, the only political undertone that may be inferred in all these numbers is, keep in mind that the budget target, or the budget target for inflation for 2025 is around 15%. So somebody might also be very correct in saying that, well, this government is driving this particular achievement, not necessarily from the traditional way of doing it, but from just recalculating this inflation method of doing it. So it might also be an attempt to move closer to the inflation targeting that was budgeted. Because if you also look at the rebasing of our GDP, we have suddenly moved from about 80 to almost 278 trillion. So all these things put together might have political undertone if interpreted wrongly. Like if somebody says inflation in Nigeria is dropping, inflation is a general rise in the general price level. You can't say the price level is seeing a decline. It is not correct. It's not even empirical, because like I was taking you through some of the selected price watch that MBS also records. You will see that prices are actually going up. Prices are going up, but because you change the method of computing this inflation, all right, it may continue this way. If you look at what else do we eat further rice a lot in this country. 1 kg of it in 2023, further rice was around 612 naira. National average by Bureau of Statistics. By April, their last report, the same of further rice is going for 2,517. So how can you say the general price level is coming down when prices are escalating? So I would just enjoin Nigerians to understand that, look, the inflation figures only came down because we rebased our inflation. We also changed the methodology. We changed quite a lot of things. How the various divisions are relevant has also been changed. So, Lawrence, you are likely going to be getting reduction in these inflation numbers. But the thing is, Central Bank of Nigeria is not buying this. If they are buying this, they would have stepped back a little bit. Though, if they also step back, we are in the quagmire. If they step back on interest rates, government securities become less attractive, meaning that federal government will not be able to borrow so much again at the domestic front. So that interest has to be high. Meanwhile, you are targeting inflation at 15%. How long are you going to hold the benchmark lending rate at 27.5%? I think Aliko Dangote alluded to this in one of the speeches he made when he said growth has been scuttled. There is no way this economy will grow at that level of non-consensual interest rates. So the private sector that is supposed to drive this economy creates import substitution and reduce the dollar content in what is consumed in this economy. It's really very sad. You are right, the inflation numbers don't actually reflect our realities.
Okay, it's like you read my mind, because I was heading towards the Apex Bank, the CBN, Cardoso and his monetary policy committee team. Or, the last held 301st monetary policy committee MPC meeting that was held a few weeks ago, we saw them retaining all parameters remain the same, both the interest rate, both the basis point and cumulative average, everything remained the same. But they are working forward to the 302nd meeting. Do you foresee after the meeting that they might also come up with some sort of measures to try to tame or tackle inflation. So it doesn't look as if it's only the statistics we're getting from the MBS that we're working with. The central bank have a very crucial role to play in terms of bringing down or lowering down inflation in terms of the interest rate, which you just mentioned. Do you foresee an MPC meeting in the next couple of months, in weeks, because the next meeting is for September, that when they meet, after they meet, these 12 members of the MPC, we say, indeed, the figure we are getting is not correlating with the market prices. Let's do something different. Do you foresee anything of sort? Because you're also in the banking sector. Let's look at it from that as we begin to wind up the conversation.
Okay, so I don't see that happening because their decision thus far has not been evidence-based. So it's almost like this is what I want and this is what I'm running with. So data has not actually been deployed. Why do I say so? If you are fighting inflation through the monetary policy instrument and you decided to go contractionary, even though at the fiscal front we are having expansionary fiscal policy. You saw at the end of 2024, our deficit financing went above 15 trillion. Okay, so there's no congress between monetary and fiscal policy. But let's even look at what the data is saying from the same Central Bank of Nigeria. Now they have this report, all right, money and credit. Okay, they have this report. So, Lawrence, when you do all the things CBN has done, raise the benchmark lending rate, increase the reserves of commercial banks, all right, you can imagine to 50%, that reduces the ability of banks to.
Oh dear. If you can still hear me, Adigwe. Okay, let's take a break on the show. We'll continue the conversation shortly. Stay with us. All right, thank you so much for staying with us still on the program this morning on ITV from our Benin Network Center. We've been having a conversation making sense out of the reality of inflation figure is lowering down, but does the figure matches with the market reality? That's what we've been talking about here. And my guest, Austin Adigwe, is still with me live on the program this morning. So Austin, you were making a point before we had that little technical glitches. So let's get your closing thoughts.
Okay, so Lawrence, I said I'm not going to put a dime on thinking that CBN is going to change its position because the data that is available to them, which they are custodian of, clearly shows that from February 2024 that we started this hawkish stance on monetary policy in terms of contractionary, which was supposed to drop money supply. See, when you are adopting contractionary monetary policy, the expected outcome is money supply will drop in the system because you are assuming that this inflation is fueled by excess liquidity in the system. So you've taken the rate up, all right, to cut back on credit, make credit more expensive, to increase the cash reserve ratio of banks, meaning that banks' capacity to create money has reduced. So the result is supposed to be a fall in money supply to match up the level of productivity that is putting pressure on the economy. But that's not what we have. If you look at in February 2024, money supply in this economy was just 97.2 trillion naira. Now, having done this contractionary monetary policy for about a year plus now, because the last report of the same central bank is as at June 2025, money supply has moved to 117.49 trillion, meaning that within this space of a year plus that we're supposed to see reduction in money supply, we've actually seen expansion of money supply to the tune of 20.27 trillion. Now, look at credit to private sector. Within the same period, credit to private sector has dropped by 5 trillion, whereas credit to government, which is public sector, has actually grown to 5.3 trillion. So you see that whatever policy of CBN in retaining these rates or retaining the position when inflation was 34%, and now that inflation, according to them, is 21%, It's not driven by data. It's not evidence-based. It's just based on what they feel they want to achieve. Keep in mind that when your rate is high, the way it is currently, right, it attracts more investment into the public sector and away from the private sector. Because come to think of it, if Treasury bill is doing 20-21%, how many manufacturers can boast of any margin within that rate? So it pays investors to put their money in government securities. I'm not saying it's wrong, but what that means is that you're depriving the private sectors needed funds to create utility in the system, to create more goods and services, which of course is needed to start the economy. So I do not expect that they are going to step back. It is for a purpose, and that purpose is being achieved.
Okay.
Government is able to get more money at the domestic borrowing line, and everything is good. We are doing this, we are sacrificing growth because the economy is bleeding. But what is important is government having more money to do their program. Talk to
Okay.
Nigerians too.
Austin, as we wrap up in less than 1 minute, the people who are feeling this pause of the reality versus the market, the figure versus the market reality, what will be your little advice or messages to them? When I say the people, I mean the average Nigerians, people who they tell on a daily basis figure is coming down, but you go to the market even with 10,000 naira, you can't even prepare a pot of soup with 10K. Before now, we know that even 2K can give you a pot of soup and stew. Before now, some years back, not in the 70s or 80s or 90s, some of us weren't born as at those times. We're talking about the early 20s and even the mid 20s and all that. But today, the reality is no longer like that. So what would you have to tell the average Nigerians who are trying to meet up with the figure and the market reality?
What I would tell the average Nigerian or average Nigerians, if we still have average Nigerians, anyway, because many of us have gone below that average. What I would tell Nigerians is, whatever we are going through, we contributed to this. If we are not willing to have discussions, okay, away from politics, away from religion, away from ethnicity, then we have also lost every right to complain.
Okay.
These leaders are from us; they are part of us. So whatever we are suffering now, we caused it, and if we've not suffered enough, we'll continue.
Okay. Thank you very much, Austin Adigwe. We appreciate you for your time, for being a part of the program this morning. We thank you very much for joining us.